The market moves down but can't break support. Is it another fake out? This is Invest with Jacob. Okay, guys, so in last week's video, we talked about the fact that we were looking for a pullback, but the bears needed to break support first, or the bulls remained in control. Yesterday, the bears started to pull back, and on the NQ, they did break support, but the ES did not quite get through. So now the question is this another fake out? I'll get into that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so what exactly needs to happen to confirm the pullback? Let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And off of the top here on Monday, we got a pretty straight line move down, and that's pretty good for what you would expect after a diagonal. So we did get what I consider 5 waves. So you have 1, 2, 3, 4, and then 5 down. And then we got so far a 3-wave structure up that's targeting about 45.90. They did come up and hit the 50% retrace, which is a pretty good number for a wave 2. You'd really like to see the 618 a little closer to that, which is 45.86, and the actual move target's 45.90. But they don't have to, and it is a diagonal that we're coming off of, so it is possible they don't come up and give us the full wave 2 sizing. So we might get that 45.80 or 45.85 or so as a number for the top of this wave 2. But the actual target is 45.90. From there, you would want to see another move down toward the lows to test them in 1 of 3, 2 of 3, and then the straight down selling. And you may not get this big of a 2 of 3 bounce. You may get, just kind of one of these deals where it comes down, hits this number, bounces up a little bit, and then you just see the breakdown. And then we should see pretty direct selling towards 4,500, which is the origination point of the diagonal. Through that, and we should be in the pullback toward the 43.50 or so area overall. And that would be what we would be looking at for our 3-wave or 5-wave structure that we've been talking about in our bigger picture videos, where off of this high, if we can get a full 5 waves to play out, that becomes a very bearish scenario for the market. But if it's a 3-wave corrective move down towards 43.50, then we would be in a more bullish stance. We would look for support to hold, the market to reverse, and then new all-time highs after that. So really what we get once they do break support, if they're able to follow through to the downside, is what matters. Is it 3 waves down or is it 5 waves down? Again, 5 waves is bearish, 3 waves is bullish. And so with this bounce up, if the bears are going to follow through, they need to come down again, break the 45 area that's been hit 1, 2, 3, 4, 5 times here and not really been able to push through. And then 45.38 after that. We should be, once they break 45.45, they should get through 45.38 in a pretty direct manner, and we should see some acceleration like we did on the NASDAQ when we go over there. So pretty cut and dry, back above 45.95 when we're looking at 46.20 or so as our next target higher. Below 45.45, and we're looking at 4,500 next as our potential stopping point, or if they blow through that, we could see selling accelerate down towards 44.30 pretty quickly. Over on the NASDAQ. So on the NASDAQ, we've been talking about this ABC playing out, and it did. They came down here, hit the A, the B, and then pretty straight line down. They broke through 15,800, which was our key support, and we did talk about acceleration here, which we saw. We would expect them to accelerate all the way down, but what happened is through all of this chop, they were able to bring the 21-day moving average up here. So the daily moving average was just above this spike low. They spiked through it and reversed and bounced up a little bit off of it. So what we would expect to see here is a bounce, which we have seen. And then we would probably like to see an ABC a little bit higher in this bounce up towards 15,960 to 16,000 area and then down. But again, we are coming off a diagonal on the NASDAQ as well. They have broken support. And once that happens, you don't get many big bounces if they're going to follow through to the downside. So you may not see a full bounce here. This could be wave 1 and all of wave 2, or maybe they go slightly higher in wave 2 up towards about 15.9 or so. So you may not, again, see that number 15.96 to 16,000, and then you should see kind of a start to a new move down here. Now, remember, we're dealing in ABCs on the NASDAQ because of the corrective nature of the move to the downside. In either case, we'd be looking at a likely diagonal. If it's going to be a bearish scenario where we play out to a much lower low, or if it's the bullish scenario, we'd be looking at an ABC anyway, or a corrective wave, and that should target around the 15,000 area. So this would be like ABC of A of A, then you'd get a B and a C of A, which you can see the A wave down here around 15,400. Then you'd get a bigger B and a C wave down toward that 15,000 area after that. So on the NASDAQ, we're looking around 15 to 15.2. On the ES, we'd be looking at about 4,300 to 4,350. If both of those are corrective structures, we would be looking at all-time highs next. If the ES is an impulsive structure or a five-wave structure to the downside, we could be looking much lower and much more bearish. So for the NASDAQ, they need to keep it under about 16,100, this shelf here of resistance. You see this peak here, this peak, this peak. It's all at about 16,100. The 764 is about at the same level. Back through that, we likely challenge these highs and push back up towards 16,300 after that. So that's the path for the bulls. Bears to the downside need to hold under that 16,100 level and then break the low back through the 21 daily moving average, which should take us down to the 15,400 for the A wave. And then we'd be looking for B and C after that. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it. I want you to become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It's an irrational market. It does things you don't expect, and good news makes the market go down, and bad news makes the market go up. That's something you can't really trade off of or understand, but with Elliott Wave, you get the key numbers and you understand when they're supposed to hold and what happens when they don't. So you're way ahead of the market before James Powell starts to speak. This course is 25 videos. And I go through 3 different sections. The introduction, where we go through your expectations, your mindset and emotion, the KISS method and why it works. Your chart setup and tools, where we go through every single indicator you need to use with Elliott Wave Theory to make sure that your tops, bottoms, and waves look proper. And then the Elliott Wave for Beginners area, where I go through each of the waves, what they look like, what their targets are, what they look like when they succeed, how you know when they failed. I go through the corrective depth theory, the theory of alternation, the pivot, all the stuff you need to know about Elliott Wave Theory so that you can have the numbers to make sense of a market that doesn't make sense. The really cool thing, guys, is if you don't want to pay the $67, I completely understand. And if you want to get the course for free, you can. You just have to become a monthly member because it is included in both monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts, as well as the Elliott Wave for Beginners course. We trade the SPY and the QQQ, and we swing in day trades. So we do trade quite often. And if you're looking for futures trading, individual stocks, income trading, as well as PT's advanced training, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, PT's new income trading, where he's averaging 5 to 6 points per day and 100 to 130 points per month, as well as PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades. It's so unique. It's something you really need to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, key takeaways for today. It's still all about support, but the bears did get started in a big way. They gave us what looks like 5 down, and we did get a bounce back toward the 50% retrace. So now we would need to hold under about 45.95. The real target is 45.90. We may not see either of those numbers if they're going to push down strongly. In any case, the bears need to come down, break 45.45 here, and then 45.38, and we would expect them to race toward 4,500 pretty quickly, and then we'll see if they're able to break through or not. To the upside, if they hold this low and they push back over 45.95, then 46.20 does become the next target. Over on the NASDAQ, they did break support on the NASDAQ through that 15,800 level. They bounced off the 21 moving average here on the daily, bounced back up a little bit, starting to come back down. They can hit as high as 15.9 up to about 16,100. They need to hold under that. I'm not sure we'll get that high if they're going to be bearish. And then what they need to do is come down, break this low, and then that would take us down toward the 15,400 for this A wave. Then we'd be looking for B and C down towards 15,000, unless, of course, the ES is able to provide us with a 5-wave move down. Guys, that is your market update for today. I will talk to you tomorrow.